Hi, I'm Josh Young with Bison Interests, and this is our latest on Journey, Unbridling Journey's Full Potential, Where's the Money? Please take a look at this important disclaimer. This is not a solicitation or recommendation. Past performance may not be indicative. Some background on Bison. We've outperformed versus various benchmarks since inception, and successfully turned around and sold a small cap publicly traded oil and gas company in the 2017 to 2018 timeframe. We own a little over 5% of Journey's outstanding shares. So today we're going to go through a few elements of our concerns and thoughts on Journey that we think have not been adequately addressed in recent public statements and investor materials by the company. We're still trying to figure these things out, and our thought is that sharing these can be helpful in figuring this out and perhaps eliciting an appropriate response. So the first element of this is persistently high operating costs. Journey's operating costs are materially higher than peers, and they rose much more than peers in the last few years and have not declined back to close to pre-COVID levels, unlike their peers. Again, using Journey's own peer set from their corporate presentation and recent financial statements. Unlike Journey's recent financial statements, which say that costs are lower in Q3 2024, we look at these costs from a slightly longer time horizon and note that while costs were very slightly lower in Q3 2024 versus Q2 2024, they're still persistently significantly higher than they were in the pre-COVID era. Again, unlike Journey's peers, raising real questions about where the money is going and why these operating costs are so high across numerous assets with different oil and gas weightings and different production methods, water flood, polymer flood, conventional production, and so on. One of the reasons that the company had cited for their higher operating costs had been elevated power pricing. However, power pricing in Alberta has fallen materially in the last couple of years, and yet Journey's operating expenses have not fallen. In this case, we're showing them on an annual basis, and again, they have not fallen relative to power prices, which are down materially year over year, and even more versus 2022. It just raises the question, what is going on here, and why has the company been unable to reduce its operating expenses materially if the reason for elevated operating expenses was this much higher power price? Next up is the Journey power generation asset, which there still aren't great answers in terms of why these projects have taken so much longer. There are still these dissonant statements between public statements by the company and its officers and information showing up in the company's filings with securities regulators. We're just not seeing a bridge between those two. And again, this raises questions about where the money is going and why there are actually the delays that we're seeing with these power projects. So why this matters is that the initial budget for these projects was much lower than the amount of money that's already been spent, and the projects are still not complete, and there's still significant capital that's being budgeted to spend in 2025. And so again, why are these projects taking so much longer than the company said? And where is all of this extra money going? And I think these are really fair questions, and the level of disclosure by the company, given the enormous difference between what the initial budget and time frame was represented for these projects and what's actually happened, I think it merits a real explanation. And when we did raise these questions with management and board of directors, we did not find that there was a explanation that that made sense or that could sort of bridge this gap. So again, there are regulatory delays. We see that in Journey's regulatory filings, but that does not explain a budget that's nearly double or more versus the original budget for these assets. And then finally, when we look at the compensation for the board and management, we see that board and management compensation has soared along with, frankly, the operating costs and not with the free cash flow per share and various other shareholder aligned metrics for the company. This raises some real questions about the governance of the company and its alignment with its shareholders and fiduciary obligations. This one, again, I think really merits an explanation. We were in the midst of conversations with the board of directors. Frankly, they had deferred a meeting citing an American holiday, even though none of the directors are American. Again, one of many sort of odd things that merited public conversation on governance issues at Journey. And in the midst of that delay, they went ahead and awarded officers and directors of the company substantial additional shares in the company. Restricted share units, which are effectively shares that require some vesting. So when we look at the most recent governance statement from the company, we still see that it's focused on climate and climate change and not on shareholder value maximization, not on the fiduciary duty of the directors and officers of the company. And we still see this extremely dissonant performance of the company versus peers and versus its overall stock market index. That's it for now. Happy to answer any questions or concerns. Easy to get in touch with us. Again, none of this is an offer or solicitation. Past performance may not be indicative. We appreciate your time. Wish you happy holidays and a happy new year. Take care.